My name is Daniel Abrahams. And why aren't retail traders getting any better? To start, institutional traders at big banks and large funds often manipulate markets. Day trader euphoria persuades noobs to enter the space unknowingly. Paper trading doesn't equate to actual trading psychology. Traders often lack consistent and material feedback to grow upon, and traders often fail to backtest and validate their strategies. All of this contributes to a limited learning experience, causing traders to lose money and confidence. If only there were a place where one could practice their trading, get substantial feedback, experiment with historical market data, learn from their mistakes, and incur minimal risk. That is exactly what chartdojo.io is for. ChartDojo uses novel APIs designed to provide scenarios, analyze your trades, and walk you through where you went right and wrong. Without real, proper, applicable feedback, how does one expect to become a better, more confident trader and develop their capabilities? That's why chartdojo.io allows traders to build real skills, not bad habits. And today, I'm just going to walk you through the product, show you how to sign up, how to leverage this amazing opportunity, and I'm gonna make a trade of my own, and I'm gonna read through the analysis and show how I can grow as a trader myself, and hopefully that somebody will learn something and take advantage of this amazing opportunity in front of them. Let's start. So we're on the chartdojo.io side. It's up here, just chartdojo.io. It's a 3-day free trial, free, completely free. And there's an interactive demo here. You can check that out on your own accord. Also, we have some live ticker prices. Obviously, it's Sunday, so nothing's trading right now. But we have Forex, crypto, stocks. It's pretty interesting. I will be right back. I'm going to go sign in, or rather create a new account so you can see what it's like firsthand to make an account, and we'll go through the process together. So I'll be right back with that. Alrighty guys, so I kind of forgot to record, or actually I messed up the recording for this part. So after you create your account, it's going to say choose your trading preferences. For me, it says change because you can change them, but after you create your account, it says choose your trading preferences. So we have the options of cryptocurrency or futures, soon Forex, and so we'll just do futures. And then it says, what is your trading style? Are you a scalper? Are you intraday? Are you a swing trader? Intraday is day trading, obviously. And so we're just going to do scalping to kind of get the point across so we can demonstrate it more easily for you. So we'll do futures and scalping. Fantastic. And then this is the dashboard. It shows us we're in a free trial, what plan we have, what kind of is our trading stratagem, and what do we trade? We trade futures. And then we have our account balance here, our drawdown, our win rate, our profit factor, and how many trade analyses that we get a day. So that means you can take 3 trades and get 3 trade analysis, and it's quite hefty. So you do learn a lot from these trade analysis. And on the paid plans, you get a lot more, and they're a lot more, it's a lot more advantageous because you get obviously a lot more. And then it shows your average win, your average loss, your best trade, your worst trade, your streak, whatever. Obviously, I just started the account, so it's 0. So let's start my first session, shall we? Alrighty, guys, so we're in our first scenario. ES, so this is E-mini, I think S&P Futures 500. I don't typically trade futures at all, so we'll just check this out. A good tip to do is to keep changing your time slots. So you go up from 1 minute to 5 minutes to 15 to 30 to 1 hour to 4. That's heavily recommended by a lot of top traders. Over here we have a lot of indicators. We have our EMA, SMA, all the moving averages. We have oscillators, volatility. We have volume profiles, And then we have like fair value gap, order blocks. Cool, cool, cool. These are very nice to have. Actually, let me just go into 15 minutes here. And remember that we're doing scalp trading. And this is also, it does tell you, is this an easy trade? What level of difficulty will this trade be, the scenario? Alrighty. But let's say I'm a noob. Let's say I'm a complete noob. I don't know what I'm doing. So we'll just make a random trade because I think that if I fail a trade right now, I can learn a lot more. Or at least you guys can. So look, a lot of volatility here. Fair value gap. All right, actually, let's zoom out a little bit. Sorry. Bum bum bum. EMA. I don't know. Sorry, wrong one. Where is it? There you go. So, VWAP. And let's say I wanted to do let's say I was going long. So, and let's say I did long. Chart Dojo recommends well, not Chart Dojo specifically, but a typical risk to reward ratio is around 2. A lot of traders practice 2 risk to reward. So it automatically follows that. It automatically follows that. So it already put in a recommended take profit, a recommended stop loss. So let's say we'll go with that. We'll enter a trade. It lets it play out. And we can choose the types of leverage. Let's do 2 times leverage. So I think I'm gonna actually, let's go into 30 minutes here. So I think I'm gonna speed this up. I don't want you to be here for too long. As you can see, actually, maybe not because I'm already making money. If it's for me, let's say if I'm a noob, I would be able to trade after the first $20 I'm cashing out. But that's a terrible way to trade. Chart Dojo helps you recognize the inadequacies and the strengths of your trade strategy. As we see when you complete the trade, as we see when you complete this trade, it's gonna tell you right and wrong. That's very rare for AI applications because a lot of AI is very agreeable. It's absolutely agreeable, and this tells you exactly where you're wrong. And it doesn't hold back. It doesn't hold back at all. You gotta learn. But it does very constructive criticism. That's what traders need. So I'm gonna just let this play out, and I'll speed it up and we can talk about it afterwards. Alrighty, so our stop loss just hit. Very sad. I'm out of 125 bucks. That's very sad for me. As we can see here, we see where the trade went. We entered around 1464.25 over here, and it stopped out at 1461.75. I guess I really am a noob. So we're gonna view the AI analysis. Check it out. I'm gonna go over that trade with you guys, and we're gonna read it together. Alrighty, guys, so our AI analysis just came out. So we have a bunch of stuff here. And we're just going to go over the summary. It tells us what we went well, room for improvement, key lesson, our entry analysis, and our exit analysis, and a real-world setup. The patterns identified. Fantastic. So please remember that Chart Dojo, this is an MVP, a minimal viable product. So this is just the early stages. It's our beta. But there's still a lot you can learn from it. And that with feedback and consistent use, that this can only get better. This can only get stronger. So let's just jump right into it, guys. Our summary: at a strong risk to reward ratio at 1 to 2, and a conservative positioning sizing at 0.13% risk, and they were executed correctly, but the trade was whipsawed immediately. Stop loss hit in 0 seconds. Obviously it didn't hit in 0 seconds, right? Like I said, this is just like a beta. It's an MVP. It's getting stronger, guys. So at the beginning, it's not going to be perfect, but we're not looking for perfection. We're looking for value. And we're still trying to aim in providing that value for traders. So the core issue, entering a long On bearish technicals, price below 200 EMA, below VWAP, with bullish momentum. The RSI was 53.7 or 9 rather, and it was MACD positive, creating a high probability stop hunt into conflicted setup. Okay, see? Thank you for telling me, Mr. Dojo. Risk management was textbook. 1 to 2 risk to reward ratio, 0.13 account risk, which was very conservative. Position sizing prevented catastrophic loss. Yup, I lost $125. Do not long into bearish structure. Price was 1.08% below 200 EMA and 0.85 below VWAP. For future scalping with 0% leverage, tighter stops. 0.60 to 70 risk. Okay. So the key lesson. Indicator alignment does not equal entry validity in choppy markets. Histogram on bearish structure is a whipsaw trap. Require price to reclaim 200 EMA before longing. Okay. If I didn't have this tool, I would have never learned so adamantly. I would have kept making the same mistakes and I wouldn't have learned as effectively. So the fact that I have this tool, no matter how slightly problematic it is, it has kind of impressed upon me what I've done wrong and what I've done right. So I know what to keep doing and what to change, how to improve upon. It also gives us our entry analysis. We had entry was open at 23% candle. Prior to 10 candle context shows recovery. Okay, then pullback. I have to go look back at this because I can't look at them simultaneously. But so I have to exit this, then look at the 10 candle context. In what, like a 15-minute drop? 15. I don't know what I think I had it on 15-minute timing. The price action was rejected at 1465.75 and pulled back 1.5 points. Classic scalp indecision. Then the entry was also near the eye of VG, but also deep inside bearish order block structure and below major MAs. And then we have the indicators. We see the histogram are bullish technicals, but EMA 9/21. Slope is flat. Yeah, that's what I noticed too. In price below 200 EMA plus VWAP is bearish structure. The oscillators conflicted with structure. Typical whipsaw setup. Okay. Stuff like that. Now you learn different setups. You learn different ways to identify that. That's a very good skill to have, and that's what our dojo is aiming to do. And then we also talk about the risk, which risk was one of the best things that I did. But the risk was poorly placed. Okay. For scalping, standard 2.5. Swing trader sizing on a 0-second scalp. Again, this is in progress. We're still fixing stuff like this. But it's good, the fact that if people keep using it, if early adopters who see the real value in this product understand that, it's gonna have flaws, it's just open, whatever, that's fine. A lot of these new entrepreneurial ventures realize that it's gonna have flaws in the very beginning, like Fortnite. Fortnite was super buggy in the beginning and became one of the biggest games years down the line. So that's good to know. Then we have our exit analysis. So over here we had our indicators, risk, price action, and our timing. Now we have our timing, price action for the exit, timing, price action, and better exit point. Timing ahead. This was the stop loss here in the same candle entry, 0 seconds. We can just forget that. Higher during trade bar was 1464.75 best case plus 2.5. Break even. Okay. Exit was mechanical / forced, not discretionary. Yep. Okay, I'm sorry, I was reading, guys. Likely hitting limit orders or algo liquidity. Algorithmic liquidity, okay. Below the candle low, okay. Leaving no margin. Price immediately tested through and broke through. So that was my fault because I put the stop loss. I didn't put it, but that's what it was automatically filled in. But let's say I did put it there. The minute it broke, the candle broke through the pattern, it immediately touched my stop loss and I was immediately out. So you got to put margin there. So that's another lesson that we learned. See, the thing with this application, we're just keep learning lessons, Every moment's a teachable moment. So that's fantastic. The setup must be traded. 1. Move stop loss to 1463.25. 50%, $50 risk, still under 1% account. Uh, as in risk reward. 2. Better yet, skip this entry. Bearish structure plus neutral RSI plus MACD. Bullish is low conviction. If you must scalp here, wait for the price to clear 1465, 200 EMA, and close above VWAP. Exit should not have been a skip. Or I'm sorry, I didn't read that right. Exit should have been a skip, not a loss hunt. See, and stuff like this, I don't even know what this means specifically. Not a loss hunt. That gives me the prerogative to do my own research, look into that. What does that mean, loss hunt? And then I just learned something new again. So even though I failed miserably, I still learned a lot from this one experience. Imagine if you had this kind of feedback on every single trade. That would be fantastic. This setup should not be traded. Well, thank you for telling me. Price is below 200 EMA and VWAP, establishing clear bearish structure. RSI 5386 is neutral, neither oversold or nor overbought, and MACD bullish histogram on a downtrend is a whipsaw signal, not a buy signal. To trade this, 1. Wait for price to reclaim 200 EMA with a close above it, plus a VWAP retest. 2. Only then with RSI above 60 and MACD histogram rising on a new, I read the wrong thing, rising on a new high, long at the breakout structure. 3. Stop loss would be at 1 point below the 200 EMA for a 1 to 2 risk to reward scalp, or simply skip ES on this time frame and wait for a clear bias. This trade was a possibility loser dressed up as a 1 to 2 risk to reward trade. Good risk management saved you from a larger loss. Thank you. Thank you so much. So at least it tells me everything I did wrong. And I would feel bad, but at least it told me what I did right. And so you at least learn what you did right, you're wrong, you know what to do, what definitely not to do next time. Yeah. And then also identifies the patterns, the bearish structure, and the bullish oscillator divergence, which, as we can see, was a whipsaw through all the analysis. MACD bullish histogram cannot overcome price below 200 EMA plus VWAP. Traders betting on oscillator reversal get stopped out by structure. All right. And that was high bear structure. Pullback to IFVG to downtrend, which was very medium. The entry was a pullback into bearish IFVG zone. Typically weak entries, buyers lacked follow through. All right, which is why when I longed, I got out. So candle low stop hunt. SL or stop loss was 1.75 below candle low. Scalpers with tight stops often stop hunted by this pattern on volatile ES futures. And then we have our key price levels, our resistance, or we have multiple resistances and multiple supports. And that's why it's also good to have the FVG indicator on. But that was the trade. Clearly I lost, but I learned something new. I should have waited, but obviously I was demonstrating this to you, so I had to do something. So, alrighty guys, that was the video, that was the demo of chartdojo.io. I hope you'll find the use in it. I hope somebody will find the use in it. I think it's a fantastic tool, no matter if you're an experienced trader or absolute noob, if you're absolutely terrible at trading. You can definitely learn something. If you're a noob, you can learn how to get better. You can learn what to do, what not to do. You can get better on your technicals, your fundamentals. You understand how to use indicators more. But if you're an experienced trader, you can apply all those things and just backtest your strategies. You can trade and try new strategies, try to identify new patterns without losing money. And I think that's very important, especially when trading. A lot of it's about confidence and discipline. And once you lose a little bit of confidence, you also start losing your discipline. You start ego trading. And I think It's a very fantastic tool to have, and I think it helps stop against that. And that's one of the biggest problems that traders have nowadays. So I really thank you for watching the video. I'll leave the website in the comments below. I'm also going to put it on the screen, chartdojo.io. You get 3 free days with 3 AI analysis per day. Remember, you can do futures, you can do crypto, Forex, TBA. So yeah, thank you for watching the video. I hope you enjoyed and have a fantastic day.